All right, guys, back to work. Back to work tonight. Tuesday is behind us. Hope you made some money out there, but we have a very important video in front of us here tonight. We have arguably the biggest news report of the week, the biggest news report of the month coming tomorrow, 8:30 a.m. CPI inflation coming on Wednesday morning. CPI, they love to give us big moves off these inflation numbers, and that means some big opportunity for us tomorrow across all of our favorite markets. I have a lot of important trades I'm tracking for tomorrow, and I'm going to give you guys a roadmap, give you guys a game plan tonight to make sure you're ready to make some money on Wednesday. Now, before we jump in and get the party going tonight, make sure you subscribe to the channel. That way you don't miss tomorrow night's video. And if you enjoy the lesson tonight, as always, hit that like button and do me a favor. Give me a holler, give me a shout out in the comments section below. Thank you so much for tuning in, supporting the channel here tonight. But enough of the intro, right? You're a bit late here tonight, Joe. Let's get this party going. Where are the best trades setting up for CPI Wednesday? Well, I'll tell you, on the S&P and the NASDAQ, we have a very interesting scenario right now. We have an overall bull market, but as you probably saw today, we kind of drifted lower into a bearish range here today. Bull market, wait a second. Bull market overall, bearish trading range. These are very interesting situations, and there's some really easy ways to make money in these situations. We're going to talk about some breakouts, some failed breakouts, some reversals, and we'll also get a game plan together if all hell breaks loose tomorrow around that CPI number. I'll tell you, oil, those buyers, pretty impressive on oil today, right? Bulls are in control here after the buyers held a pullback. We have a lot of trading opportunities on oil right now. Buyers would love to get some breakouts up to 77, 78, maybe 80 later on this week. We certainly would imagine some double top reversals on the oil, and I think we're looking at one big trading range forming here right now. So buying low, selling high, fading breakouts. Oil might get pretty fun here as we go into the summertime season, right? Especially ahead of the driving season. So we're going to cover that all in the oil tonight. So S&P's ready, NASDAQ's ready, oil is ready. It is great to see you are ready right along with me. Now, before we jump into these charts and talk about my favorite trades for tomorrow, let's all make sure we all get on the same page here. The big news for tomorrow is that CPI number at 8:30 Eastern time. Remember, these oftentimes give us some very, very big moves on the chart. So be careful around that number tomorrow. Our job tomorrow will not be to predict whether it's higher or lower. Our job tomorrow will be to put together a game plan so we can trade the reaction tomorrow morning in our trade room. And we're going to outline some different scenarios tonight that way you get a game plan no matter what happens on that CPI number. That's the big news for tomorrow. We had that kind of first of what appears to be many debt ceiling meetings on Capitol Hill, and to everybody's surprise, nobody negotiated. Everybody said, nope, we want to keep spending, or nope, we want to cut, right? So there was very little that was done at the first of what sounds like many debt ceiling debates or negotiations coming on. They've now kicked it down the road to Friday, and so it sounds like we'll probably be dealing with the whole debt ceiling drama until we hear more about the next meeting scheduled here for Friday. So with that debt ceiling out of the way, there may be a little fallout of that. It's tough to tell right now. We know right now the market will shift their focus now to what is that CPI. Remember, a couple days ago, last week, the Fed basically told us they were going to pause their rate hikes. That CPI number, are they going to force their hand, right, to keep it going, or will this fall in line with the narrative of falling inflation? We're going to find tomorrow morning, 8:30 Eastern time. That is the big news here for tomorrow, and of course I'll be listening in tomorrow morning any updates regarding the debt ceiling. Back to our charts though, right? Knowing when the news is scheduled is important, but again, we're going to trade the reaction tomorrow in our trade room. Now, I'm going to cover all my favorite trades across each of these markets here tonight. If you like making money, I would definitely make sure you watch all the way to the end, because every trade I talk about can be applied to your favorite market, especially the S&P and the NASDAQ. I will wrap it all together and make it worth your time. So get comfortable, take some notes, and we'll do this here tonight. We'll go S&P, NASDAQ. We'll wrap things up, of course, on the crude oil. Guys, these are all tick charts. Don't forget, all tick charts. you can find all the time frames in the upper left-hand corner. This is the 21 EMA, right? That's the yellow line on the chart. And as always, you can find additional time frames. I have 60-minute charts, 4-hour charts linked up in the description of the YouTube video. I like to use the 60-minute chart specifically to give me an overall directional bias, and that gives me a bit of a filter to find the best trades each day. So if you want to see more of a bigger picture lens to look at these charts, definitely check out the links linked up in the description of the video. Now, what are the most important factors on this chart right now? There are two key factors, maybe three key factors. One of them is this very, very bullish move that we saw from last Friday. We talked about this last night, right? Anytime we see a real big move like this, we are anticipating a deep pullback and a retest of the high. As I mentioned last night, we anticipated a lot of buyers waiting down around this 41.2725 on the S&P, and we're right around that same spot on the NASDAQ. So we do have still this overall bullish tone to the market, and because the move was so big last Friday, we expect this thing to pull back nice and deep and then be looking for a retest of the high. So right now the buyers have one thing on their mind, right? They want to go back and take out that high at 41.63 on the S&P. Very similar situation on the NASDAQ. So that is kind of the overall picture or strategy, overarching part of this. Now, the second part of this is a very interesting part. We talked about this in the introduction, right? It's a bearish move into a trading range. Now, these are pretty cool to trade because ranges act like magnets. Okay, so if you understand if a range acts like a magnet, if we go lower, right, below that trading range, we get a range breakout. If we have an overall bull bias and we're expecting buyers to be waiting down here to try to buy this thing back up again, that range only helps them, right? So this range above us, this range above us, this range above us, these become just huge magnets, and we assume, again, buyers are waiting for those nice deep pullbacks we talked about in last night's video. So certainly one of my favorite trades tonight or for tomorrow, right, is basically a breakout that fails. Right? A fake out breakout, a reversal off the low, whatever you want to call it, right? It's a failed breakout off of that low. Now, tomorrow's got CPI, right? Tomorrow's got CPI, and there may be some fallout after this, very unproductive meeting about the debt ceiling. So I do want to talk about if this thing falls apart, right? If it does fall apart, because I'll tell you, if the Bears get their hooks in this thing, off the debt ceiling jitters or a red hot CPI number tomorrow morning, we have a lot of space to give back, right, from that big move up on Friday. So I do want to talk about that in quite a bit of detail tonight, because it's definitely part of the process. One of the most important things right now is to understand that the buyers still control momentum. You'll notice that every time we try to go lower, the bears are having a hard time getting away from the 21 moving average. And we talk about this a lot in the free trading course, right? Look at how well the buyers did. Every time the buyers popped it up, they're getting a very good jump, right, away from that 21 moving average. Look at every time we go below the moving average, right? Besides that area right there, the bears aren't getting anywhere. So we know right now we are long-term bullish, and we're still pretty much short-term in control of momentum. That can change tomorrow, but until something changes, you get a pretty good game plan, right, to find some winning trades here for tomorrow. So I'm going to talk about a couple different of my favorite trades. My favorite trade, of course, is the move going lower, right? But I also want to make sure we know how to trade a possible breakout going higher as well. All right, we're going to cover both sides of this here for today. Now, there are probably three main components that you want to be ready for if we go lower. Right? If we go lower, we're going to feel very bearish, right? We'll feel very bearish. There'll probably be no shortage of sellers trying to sell down here. So a lot, like I talked about last night, as we pull back, my job tomorrow will be to, and again, knowing that I want to buy down here, right? My job tomorrow will be to basically trap in some of these bears and use what I call a failure pattern, right? My failure pattern to ultimately use their stops as fuel for a run back higher. Again, if we understand the buyers are buying low, if we understand that range above us, right, acting as a magnet, okay, if we can get that price going lower, we can now use what I call a failure setup, or what's called a two-try failure, right? It's a variation of that failure pattern you guys are learning in our free trading course, all right? So I'd love to get that two-try failure and light that fuse, right? Squeeze those bears and use the stops as fuel going higher. Now, a couple things you want to be aware of with this. When we trap the bears in below these lows, okay, we trap the bears in and use those stops as fuel. These oftentimes really will rip, okay? They'll really rip and run higher. And we know where the market wants to go, right? It wants to go back up to retest that big high. The problem though is as we start going higher here, we start dealing with prior swings. And prior swings are where who are? Yeah, sellers are going to be waiting around those prior swings. So if we end up going higher, this is where you want to break out my favorite entry pattern, which is a trap, right? Now watch how I do this. You want to start looking left and finding prior swings, okay? Find prior swings, then go out and draw a trend line off these highs, bring it up around that low, and these are, as you guys know in the free trading course, right? These are money setups right here, right? These are great. So I always look for that trap right below a prior swing, and if I can get it off the low of one of these channels, right? Draw them backwards. Those are primo. All right, guys? Now, again, right? So it's a failure pattern off the low, trap the bears in, and then if we start popping up and going higher here, right? We know where the market wants to go. Bingo, trap entries, just like I talk about in the free trading course. Which reminds me, I know that most of you guys have taken our free classes. You've learned things like failures and traps, how to use stops as fuel, especially in range bound markets. But if you're watching for the first time right now and you haven't taken that free video course and learned all the entry tactics, I'll put a link up there for you in the upper right hand corner. Grab that link, take that free trading course, because you'll learn a simple trick to know exactly where the best winning trades are going to be each day, and I'll make it easy to start making money on your own account. I'll teach you my 4 favorite entry patterns. I'll tell you, if you're missing the best trades right now, if you're taking too many losses, don't wait. Grab that link, take that free course, and you will learn the strategy that we love with ranges, right? Trap those bears in. I have hundreds of examples, right, in that free video series about using scenarios like this, right? 2-try failures and then grabbing that first pullback, right, as it rips up and runs higher. Okay, now one variation of this, okay? One variation, and I do want to talk about if we go lower here, all right? I'm going to talk about that in a moment. One more variation. Okay, oh, and don't forget, I will cover if we go higher. Believe me, that is on my radar a bit later on in this video. Now, we might have so many buyers down here, right? And the CPI report tomorrow morning, we may V bottom and jackknife, right, off that low. Everybody might be piled in to buy down here, right? So if we do see it V bottom like this and just jackknife off that low, this is where you can default now into that same idea. But remember, just don't chase it. Okay, because as you go higher, you're going to be running into overhead resistance. You don't want to buy high. This is definitely where you start looking for those trap patterns. Okay, so in other words, right? In other words, I would love to, right? I would love to get that move lower, right? Get that move lower, trap the bears in, and go higher from there, right? And then look for the pullback entry, right? The trap entry, the failure out the that channel. But if all we get is that V bottom and jackknife right back up, okay. Right? Next best step is, as we start to roll higher here, look for those traps. Remember, draw those channels backwards. Okay? So just keep that on your radar as we go lower. Use that range as the magnet and that big support level down below us. Okay, now, how do we look for shorts, right, as we go lower? Well, remember, as we go lower, we have to expect there are buyers waiting down here. So we have to basically blow those buyers out, right? And again, this could easily happen because tomorrow's CPI report. And again, you know, we don't really know how much jitters the market will have, how nervous the market will be about this debt ceiling. You know, they always get this darn deal made. This is nothing new. They just make it sound like it's new every single time, right? The news media and politicians are going to make us so scared the next few days. Don't let them scare you too much. But but it may affect the markets, right? So we may be jittery here. We may see this thing, right? Take a bath and take out those big lows from last Friday. Now, again, I want to go in and I want to get those bears trapped in and bind stops. But if they, for some reason, if they hold that pullback, right? If they hold that pullback and we see a strong jump off the moving average, okay? I mentioned this a few moments ago, right? Up until now, every time we've gone below the moving average, the bears have been unable to accelerate, right? The bears have been unable to get onto the 21, hold and go, okay? We may get that tomorrow. And if we get something like that, right? If we get something that takes out the low, right? That holds the pullback and jumps off that moving average, okay, now we go hunting for last Friday's low, right? Now we go hunting, and I'll show it to you in a second here. But what do you do with it though, right? Whatever we do, we don't chase it, okay? We call these 1, 2, 3 moves, or 1, 2, 3 breakouts, right? In our trade room. I'm going to mark off the low. Okay, I'm going to mark off the high. Usually on these, I'll go up and find a bigger high up here, right? From that bigger high up there, right? From that bigger channel. And then I look left, I find some prior swings, right? Because of course, swings are where traps live, right? Get above the moving average, 21 moving average. Get the buyers coming in, trying to buy, use their stops as fuel, right? Failure pattern, failure into pullback pattern. We talk about this in the free trading course, right? We call it the price action cycle. Okay, so again, as we go lower, remember, we're not selling that first pullback. You can do whatever you want, right? But that's not going to be a very reliable trade. That is probably a 35, right? 35, 65 trade, right? It's probably not going to be an 80-20 trade, right? I'd rather be a buyer there. But if they hold that pullback and jump, okay, now selling that first pullback, that's a 75, 80% winner right there, right? That's a good one. Right? I would much rather skip the 35 or 40% winner on the first pullback, save our bullets, right, for that much more reliable trade as we're going lower. Okay, guys? Now, another variation of this is a pop and grind. Okay, let's say something happens overnight, the news tomorrow morning, right, and the market rips lower, and we start grinding. These are pretty easy. Draw that trend line off that low, market up around that big high. Remember, anytime we see a strong move in one direction like this, we expect what? A pullback and a retest of that level. Okay, some of the best entries will come just above a prior swing and up around the high of that new channel. All right, and I'm keeping it simple right now, obviously. You guys will see a lot of examples of things like traps and failures, all the entry patterns I'll use, right, to get short off the top of that channel. You'll learn that, right, in that free trading course, right, linked up top or in that description of the video. All right, guys? So that's the way you want to look at this as we go lower, right? If we go lower here, we'll trap the bears in back up, and if they accelerate, all right, well, game over for the buyers. Now we go hunting. Right? Now we go hunting for that, for levels down here, right? And we'll know more details on big targets there for tomorrow. All right. Now, the next big question. What if we don't go lower, right? What if we go higher here? What if we end up ripping, running higher here? Okay? These are more challenging. Okay, we'd love to go lower before we go higher. That makes our job a lot easier because it's just a lot easier to make money to buy when you're buying low rather than buying high. So let's talk about that now on the NASDAQ. Okay, NASDAQ is very, very similar here to the S&P. All right, there are 3 main components on the NASDAQ right now. Okay, the first one is, of course, is this overall bullishness. That's a huge, huge move, right? A huge, huge move. And for the most part, as I mentioned last in the video, been waiting for this market now to get below that low. We just got below that low right before the closing bell this afternoon. All right, if you watched last night's video, strong move, pull back, retest, right? If we don't go through that high, which we did not, we then assume we're taking out that low. So we assume buyers are waiting down here, right? Buyers are waiting to buy low because, again, you get a big bull market right in front of you here right now. Now, at the same time, there's a range. In fact, there's multiple ranges, right? Range here, and there's a range right there as well, okay? Ranges act like magnets. Okay, so as we go lower, unless the sellers can rip this thing going lower, which they certainly may be able to, and we are now ready for that, right? We talked about that a few moments ago on the S&P, right? So unless the bears can do that, right, we assume buyers come in, trapping in some bears, right, and looking for that run back up into that trading range. Now, again, a very good example today. Look at how, this is kind of the third component, right? How do we know the buyers are still holding up right now? Well, look at the separation off the moving average, right? Look at how much separation the buyers get, right? Every time they go above the moving average, okay? Now, compare that separation to the sellers, okay? Right here, right here, right here, right here, right? The sellers are getting smothered by the moving average. Okay, it's a very, very easy way to tell who has short-term control of momentum. Okay, so that means the buyers still have this. Okay, we're not a bear market just yet. Okay, so we know how to trade this if it goes lower, if it falls apart, right? We know that if we do end up reversing and running lower, okay, they're trying to take out levels below us, right? Specifically that big range down below. Okay, so we're ready for that tomorrow. The big question now is if we go higher. The biggest problem we have is that if we go higher, we need to get enough momentum going higher to attract more buyers, right, to buy high ultimately. And we have to worry about the fact that we're in major resistance. Okay, I would definitely encourage you, if you're a NASDAQ trader, go check out the 4-hour and the 60-minute charts I linked up in the description of the video. And you'll see, we're pretty bullish overall, but this is no joke, right? This area is a major, major top in a big range-bound market. Okay, so it's definitely going to be resistance. So when you think about going higher, there are two things that come to mind. One is, as we're going higher, if we go higher, we have to assume that above all these swings, who's waiting up there? Sellers. And so we have to anticipate those bears coming in, and therefore the best way to make money going higher is going to be with a bear trap, right? Trap setups. Okay, we talk about this quite a bit on these videos, right? You guys will be experts on this after you take my free trading course. So as we're going higher here, now, how about selling it, right? Could I sell in this area? That's a dangerous place to be a short seller. Okay, we can imagine this being one big range, right? The market wants to rotate back and forth. So if I want to be a seller, yeah, I can sell off the high. I definitely can, and we'll talk about that in a moment, all right? But trying to be a seller here, no thanks, right? I would rather be a buyer as it goes higher, right, to trade this rotation, right? Rotation's a big part of trading, right? So buying it as it goes higher, and again, respecting the fact that we assume the bears are up there, and so as we're going higher here, we want to buy as low as we can, right, to absorb some of those bears, and this is where traps come in, all right? So trap patterns, right? Simple trap patterns going higher. Right? If we pop up, strong move, shallow pullback, higher high in price, right? Remember, higher high, very important for a trap setup. You guys learned this in the free trading course, okay? So traps as we go higher. Now, I want to talk about the reversal off the high in a moment, but let's talk about breakouts, okay? We talked earlier that to get a breakout going lower, we have to go lower, we have to hold the pullback, right, and then jump, right? We have to hold that pullback and give us a lot of proof, okay? Now, look what's happened the last couple times. The last few times we've gone higher and pulled back, no proof. Go higher, no proof. Almost right there, but no proof. Okay, so we know how to make money going higher, but once we start running these highs now what do we need? Proof, right? This is a very important part of this. So as we go higher here, I then look for that 21 moving average coming over. Okay, none of this, all right? None of this for the buyers over here. Right? Well, again, you can do whatever you want. I'll be waiting for the pullback. I'll be waiting for proof of that breakout going higher. Again, this is probably a 35%, trade, right? If I wait for that proof, right, then this pullback now, right, again, I'll go in, draw off the high, and I'll be looking for bigger channels, right? Those kind of hidden channels we call in our trade room, right? And then go out, right, and start thinking about buying that first pullback. Okay, and again, I'm going to keep it simple right now. This could be a trap, right, below a prior swing. Okay, it could easily be a failure. Get below the moving average, right? Bears come in, try to short this thing. It's a strong move higher now for the buyers. They're going to want to retest that high, right? So it could be a trap, it could be a failure, it could be a pullback combination as part of the price action cycle that you guys learn in that free video series. Okay, now one thing about these breakouts is that the first leg, okay, is the measuring leg. All right. So if you're wondering, okay, if we get that pullback up here, right, if we do get that 1-2 jump, right, that nice proof, If we do get the entry off that pullback, where's it trying to go? Right? Remember, this is a lot of space up top here. Look at this. It's way open. Look at this. It's like 14. It's like a gajillion up here, right? 14,058. It's a lot of space up here. Look at the daily chart. You'll see what I'm talking about. Okay? If we end up running up, and this goes for the S&P as well. Remember, keep in mind, same thing for the S&P. Okay? If we run up, we hold that pullback, and we jump off that moving average. Okay? We find that new channel. We mark off that, right? Mark off that hidden channel, we call it. We find those prior swings. We get whatever entry pattern, right, off the low of that channel, okay? This is the first leg, okay? That's the measuring leg, okay? Once we know the pullback size, that creates the anchor, all right? We take the size of that leg, and we project it off that low, and that equals that leg, okay? First leg equals third leg in almost every case, right? Not every time, right? But first leg, third leg, okay? So this breakout leg, right? That's kind of the oddball. So 1, 2, jump, right? And then find that first entry or find the first pullback, right? It's a trap entry. It's one of my failure entries off the low of that channel, okay? Keep that on your radar here for tomorrow. Or remember, big news tomorrow morning, right? We pop up and we start to grind. We pop and we grind, we grind. The grinders are pretty easy. Yeah, they're kind of frustrating because, they don't really give much of a pullback, but they're pretty easy, right? Remember there's news tomorrow, okay? So this is all very possible. Anything is possible around the CPI report. If we pop the news up, right, and we start grinding higher, now we go out, we draw tight channels off the high, we pin them down around those lows, and again, right, remember, look for that pullback off that channel. Okay, one thing we always look for is can I use some of these prior highs as a key area of support, right? Get that pullback around the low of that channel. Maybe it's a trap, maybe a failure pattern, right? Whichever entry pattern we get, right? But again, remember, we want to wait for that proof, right? If it begins to pop and grind through the high, again, we're not buying that pullback right there, right? We're buying on the way up with a trap setup, right? But once we get up there, though, now wait for proof and then wait for that first pullback. And that's a 75-80% trade right there, okay? Much more reliable than trying to predict breakouts, all right? So don't predict, trade the reaction, okay? Those are two of my favorite setups if we can go higher and take out these highs. Now, last but not least, the NASDAQ, and then we'll go over to the oil and finish up here on the oil, all right? If we make our way back up to retest the high, we mentioned earlier, right? This could be fleshing out into one big trading range, okay? So we're looking for traps on the way up, and then once we get higher here, how do I sell off the high? Well, what's the problem? Well, it's not location. Location's great, right? That's a great place for a short, right? Top of a range, but the problem is momentum. Right, we're bullish overall, and this will be assumed to be a very bullish short-term move. Okay, look what happened over here. Okay, notice how we went up. See the buyers? They tried once, right? They tried twice, and they fell apart from there. Okay, that is the type of situation you want to see off the high. Okay, so we know where the highs are. We find our way up around these highs. This is where you, again, because momentum is so bullish in this scenario, we don't just sell off the high, right? Because it could keep on going, easily keep on going. We wait for the buyers to wrap that noose around their neck. We let them dig their own grave, right? We let them try a couple times, and then we use their stops as fuel. Okay, whether it be the 2-try failure, right, or a bull trap entry with a crown reversal. Okay, these are my favorites. Okay, when I'm trying to go against the overall trend direction, I'll let buyers try twice, and then knowing their stops, right, are sitting right below that low, I'll look for a nice juicy signal off that high, nice strong convincing signal closing well below the 21 moving average, right, and look to sell right into those stops for what will probably be a run back down to the other side of that range, all right? Call these crown reversals, call these 2-try failures. They're basically a variation of the failure pattern. All right, guys? So that's the way you sell, right, off of the high, okay? And again, if it keeps on going, well, there you go. There's your breakout. All right, guys? Now the game plan's ready to go on the NASDAQ and the S&P. The only real variable right now is how will the market react to the CPI report tomorrow morning? Will we start keeping more jitters about the debt ceiling issue? Hopefully they negotiate that and get that deal done sooner rather than later, because none of us want to keep dealing with that for the next few weeks here. All right, over on oil, and I'll make it quick. I know I'm running late on the video. Oil is pretty bullish right now, right? After the buyers successfully held their pullback. If you watched last night's video, we had a very strong move higher. And so we anticipated, right? We anticipated a run going lower. We talked about how the best way to short something like this is to look for a 2-try with a trap, right? A pretty nice short this morning, by the way, as well. It just simply didn't go as far as we would have liked it to have gone. The buyers, of course, picked it up, right? Buyers picked it up, and they run it back to the high now. Mission accomplished. This is a very simple idea of what's going on right now. It's a very strong move, right? Strong moves love to be retested. The buyers came in and did a very impressive job at defending it. Remember, overall, we're pretty bearish on oil, right? So the fact that buyers were able to hold this, right, and retest the high, it pretty much breathes brand new life into the buyers. It really does, right? It props them up nicely here right now. Now the question is, do we keep going higher for a breakout, right? Do the bears smother this into overhead resistance? Okay, if you're an oil trader, you should be looking at that 60-minute chart in the description of the video because you will see that major resistance level is right there, right? So great spot for the bears. Will the bears come out and take this back lower again? And this may end up turning into one big trading range, right? We buy low, we sell high, back and forth we go, okay? So really there are 3 basic kind of principles to trade tomorrow. One is the breakout going higher, okay? What do we need for a breakout going higher? We need to either continue with a grinder, right? It needs to float going higher here, okay? That way we can go out, begin to use these prior highs as support now, find some bigger channels, right? Go look left and grab those pullbacks. Okay, and again, I'm going to keep it simple right now, right? Could be a trap, could be a failure, any of the entry patterns we have, right? You're learning in the free trading course, okay? So if we do go higher here, we start looking for pullbacks ultimately, but again, we have to get, right, some sort of proof through these highs, okay? Or we may end up pulling back to the moving average, right? 21 EMA, okay? They didn't hold back here. Remember, they have to hold that pullback and jump, right? This could be their time, right? This could be the time. I don't know, right? We're ready for it, though, if it does. If they jump off that moving average now, that is, again, a breakout pattern now. 1, 2, 3 breakout. The strength of that move confirms now we're leaving this range and looking for another range. I'm going to find that high. I'm going to bring it down off that low. We're going to mark off those traps, right? And go looking for the first test off the low of that channel because, after all, the first test is always the best test. Okay, so again, this 1-2 jump needs to be very convincing. Okay, very convincing because we have, again, a lot of resistance overhead. Okay, if we can get that breakout, where do you think the buyers want to go? It looks pretty evident that 77 is probably in the cards. This is the next kind of big top that we had, right? It's a prior swing low, prior swing high. 77 looks pretty ripe there if the buyers can take this. But that's if the buyers can take this, right? We're also sitting right at this prior low, which again is why the sellers may have their shot tomorrow to run this thing back down again. Now, how would I sell off the high? Okay, what's the problem? The problem is momentum, right? It's a great place to sell short. But this is not a bear market right now, right? I get it, right? On a 4-hour chart, on a daily chart, it is. But unless you're a long-term trader, I'm a short-term trader. So for me, I have to lean more on the short-term momentum. There's nothing wrong with being a long-term trader. It's just not my style of trading, right? It might be yours. So if I want to sell off the high, what do? I have to trap these buyers in, right? I have to turn this thing over. Okay, and with all that momentum on the buy side right now, you have to turn this ship around, right? Now, we just talked about this in the NASDAQ. Okay, what do? You have to use stops as fuel, right? In order for me to turn this around, you can try to sell the high right here, just kind of short it. But if you sell right now, you better be prepared to sell more if it goes higher, right? I would rather let the buyers kind of walk themselves down the plank, if you will, let them try a couple times, and then use their stops as fuel for a run back down again, right? It's simple. It's called a 2-try failure pattern. All right. We simply let the buyers trap themselves in. If they're successful and they break higher, okay. Now we have a very reliable trade. We now know where to get on the rebound. All right. So the key is just waiting to see what happens here at these highs. If the buyers struggle and fail, we get short and go back down to the low of that range, which now brings us now to the next trade. Now we find ourselves in a big range here. And you'll notice, right, it may also be a bit of a channel as well, right? We may go up in that channel high, 1, 2, back down again. And then what do you think about this one, right? Can I buy? Oh, you definitely can buy down here. Right, we're still very much overall bullish, but remember when it collapses like this, again, there's that short-term momentum. So unless we get some V bottom off the low, which by the way, if you did see a V bottom off the low, how would you trade it? Trap, right? If a V bottoms off that low, what do? You buy as low as you can, the trap setup. Okay. The ideal scenario, right? Trap setup. The ideal scenario, of course, is we let those bears, right, try a couple times and we get that failure off the low. Okay. This may trigger stops so greatly that it may rip higher and we do get that trap going higher. All right. We talked about this game plan right at the beginning of the video tonight. Okay, that 2-try failure into that bear trap, right? And again, traps are great on the way higher because it gets you in at the lowest possible price, right? Ideally, I want to be buying down here. But if it V bottoms off the low, or if it, again, 2 tries and jumps up, right? Now we go in for bear traps on the way back up to retest the high. And then who knows? Maybe that's the one that breaks the bear's back and we break out from there, pop and grind breakout, 1, 2, 3 breakout, okay? The only other variable now is do we collapse off the high? Do these bears successfully hold that pullback, right? And jump off that moving average? Again, we're not going to sell that first pullback, right? That will be a risky trade, a low probability trade. If they hold the pullback though, okay, now it's on, right? Now we find the new channels, we mark off that high. Do you see how this works, right? You see how this kind of dance works back and forth like this? Right? We buy low, we sell high, we make them prove the breakouts. If they prove the breakouts, remember, that's a 35% short right there, right? 75% short. Which one do you want to build your career on? Right? Which one do you have the impulse control to wait for? That will very much determine how easy or hard trading becomes for you. All right, guys? So hopefully that makes sense through on the oil. A pretty simple game plan if you kind of understand the idea of ranges. Now, speaking of ranges, we talk a lot about ranges in that free trading course, right? So if you've done so already, grab that link linked up in the description of the video. You will love it. You can thank me later, right? It will help you. It will help make trading easy for you. I can pretty much guarantee that. All right, guys, the game plan is ready here for tomorrow. Now we wait and see what happens overnight. Don't forget, I'm going to put all the free class links, the free course links, all the trade room membership links. We trade together every morning at 8 o'clock Eastern time with all the members, and I'll put all the higher time frame links linked up in the description of the YouTube video. If you got any questions, if you need any help about getting access to any of this stuff tonight, don't be afraid to call the office. We're always here. Give us a call. I have live chat as well, so if you need help, we're here to help no matter what it is along the way. All right, guys, hope you learned a bunch here tonight. I'm going to wrap tonight here for you. Thank you so much for your patience. Thank you so much for watching all the way to the end. You are the person I do these videos for, so thank you so much for your dedication and your support of the video tonight. Now get out of here. Enjoy your evening. Get some rest. We'll see you tomorrow morning in the trade room, 8 o'clock Eastern time. If not, we're going to come back tomorrow night and trade the reaction to the CPI report we get tomorrow morning. Guys, my name is Joseph. Be well. Be nice to each other out there. And be here next time. Adios, amigos. Bye-bye for now.